afternoon. This is Oliver Slow, Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of the 2-Minute Drill. Today is Wednesday, May 3rd. There was a lot going on in the commodities markets today. Crude oil sharply lower. The metals catching a little bit of a bid ahead of the Federal Reserve meeting, in the grain markets and livestock markets flying around as well. So it was tough to narrow it down to two markets to touch on in today's 2-Minute Drill, but we did narrow it down. We've got wheat and live cattle. So without further ado, we can go ahead and start the shot clock. We've got the July Chicago wheat contract pulled up here. As you can see today, we got a big move higher here, 30 cents higher, trading to just shy of 640 at the close. And that brings the market out of oversold territory. Now, part of the reason that this market caught the rally today was on the back of news headlines that the Kremlin was attacked and there was a assassination attempt on Putin. Now, whether or not that's true, to be determined, but nonetheless, that did spark some short covering, and this is something that we've been talking about for quite some time now, is the risk of a short covering rally. This is a 5-year chart of the Commitment to Traders report. Looked at by this yellow line, that's their net position. You might have to squint to see it here. It's a little bit small, but you can see that they are aggressively short here, okay? And you get that headline risk out of the Black Sea. You've got a narrow exit door for the funds who are short at these levels. And so I think that's what we got today. But on top of that, just before that headline even broke, wheat was really holding quite a bit better than what we saw in the corn and soybean market, which I think showed signs of exhaustion as well. So I think this bodes well for the wheat market going forward and can retest this breakdown point near 670 in that July contract. Now, moving over to the livestock side of things, we've got a nice little pullback here to start the week in June live cattle. We pulled back into this gap here from April 6th, as well as the 50-day moving average. This is a very pivotal pocket for the bulls to defend, regardless of the outside fundamentals. I think this technical pocket is going to be significant. A break and close below here, and you could see the opposite of what's transpired in the wheat market. You could see a long liquidation. Right now, we know that funds are long roughly 105,000 contracts. That's 124,000 contracts long versus about 20,000 short. So again, fundamental stall out. The risk of long liquidation is there. The next target would be near 159.50. So that's 2 minutes. That's the two markets we're looking at. If you've got any questions, please feel free to reach out. And remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.